On the question on what constitutes a deferred payment, let's look at this simple example. So for example, we've got a company that acquired the assets of company B, and the settlement arrangements were to issue 150 additional ordinary shares at $10 each, as well as a cash payment for the balance, an amount of $300,000, but the cash payment has been deferred and is only payable 1 year after the acquisition. Because there's a timing difference between when the acquisition was made and the settlements recorded and when the actual cash flow occurs, we have to consider the time value of money. So let's assume that the company's incremental borrowing rate is 10%. So if the present value is $300,000, the interest rate per year is 10%. It means that if the company had to borrow money on the date of acquisition to settle this deferred payment immediately, they would have borrowed an amount of $330,000. Now let's see how we record these transactions. Following the approach in the textbook, on acquisition date, so 30th of June 20x1, there's two components to the consideration transferred. The first being the share capital, or the shares that were issued, the share-based payment, 150,000 shares at $10 each. So we debit our investment in associate or the assets that we've acquired, depending on the nature of the transaction, credit share capital with $1.5 million. With regards to the deferred payment, we also debit our investment or assets account with the $300,000, and we credit a deferred consideration. 1 year down the line, we will then settle the deferred payment. So we debit our payable or deferred consideration account, but then we record an interest expense, the interest component to this transaction, and the cash flow is then the future value that we've calculated. Now there is an alternative approach where we, on the date of the acquisition, if I just go back to the journal entries on the acquisition date, that the interest expense payable can also be recorded at this stage, and we record the total deferred consideration. But yes, that's just an alternative. The first example was following the approach in the textbook.